All right, what's going on, team? You guys are all having a great day. So last time we talked about this idea of trading across multiple time frames, and we're going to discuss that a little bit more in this video and in the next one and in the following one and pretty much forever ever more, because we're always going to want to be focusing on trading in the direction of the higher time frame. We're going to take a step back from Dogecoin today, and we're going to go back to Bitcoin, as I find that sometimes it's just easier to stay focused on Bitcoin. But today we're going to talk about focusing on the trend and market cycles, right? We're going to incorporate moving averages back into this and see how they can actually be one of the most helpful tools when trying to determine trend. We'll also maybe take a look at my stochastic settings and kind of combining a bunch of stuff to profit on long and short-term market movements. Okay, so let's start off with, let's just take a peek at the bands real quick, right? So this is my set of waveform bands, and there are a few in here, as I think I talked about in the EMA video, that we want to focus on more than anything, right? The most important being this teal EMA, which is the 8. And that's pretty much what I will call it, the 8, right? That is going to determine our trend on any given time frame. Okay, and then we have the 30, which is right in the middle, and the 60, which is the lower end of our EMA support, which I will almost always refer to as the bands. So if we pull back to the 60, I'm going to say, yeah, we pull back to the bands, right? Where are we looking to buy? I'm looking to buy near the bands, right? That's just going to be a little terminology lesson for you guys. But the most important one here for sure is the 8 EMA. And if you're ever wondering which direction the trend is in, go look at the monthly, go look at the 8 EMA. If the 8 EMA is going up, 9 times out of 10, you're in an uptrend, right? If it's going sideways, you're in a range. If it's going down, you're in a downtrend. This is not infallible, and it's also not rocket science, right? If the average price has gone from up to down over the last 8 candles, then naturally you're pretty safe to assume, yeah, we're in a downtrend. And we can pretty easily see this on our current chart, right? And it can help us to identify when and how we want to be trading, right? The 8 EMA is up, I want to be a buyer. The 8 EMA is sideways, I probably want to be stepping to the sideline and just evaluating. The 8 EMA is down, I want to be a better seller. Up, I want to be a buyer. Maybe I'm taking a step back and I'm a buyer again. Maybe I'm stepping to the sidelines a bit. Maybe I'm cautiously buying back, stepping back to the sidelines, starting to scale out, and now I'm a better seller. Maybe I'm going to stop selling. We're going a little bit sideways here. Maybe look for a reversal. Starts to move up again. We're back in an uptrend. Starts to flatline. Maybe I'm being a bit cautious. Starts going up again. I want to be a better buyer. We start to go up even faster. I'm definitely going to be a better buyer. Okay? Simple way to look at it. And the same thing we learned last video, we can apply here. 8 EMA up on the monthly, I want to be a better buyer. 8 EMA up on the weekly, I want to be a better buyer. 8 EMA up on the daily, I want to be a better buyer, right? And you'll find that the 8 EMA tends to just represent price reasonably accurately, but it almost paints its own trend by itself, which again is not rocket science, right? Clearly we can see this asset is in an uptrend. You want to be involved in the buy side. Now it's into a downtrend, right? You want to be involved on the sell side. Now it's in an uptrend. You want to be a buyer. Now you want to be a seller. Now you want to be a buyer, right? Now you want to be a seller. Now you want to be a buyer. Now you want to stay to the sidelines. Now you want to be a buyer, right? this is going to be one of the most important tools for us. Okay, it's going to give us simple trend direction without even really having to think. Right? You come in on any given day. The 8 EMA is rising. In general, you're going to want to be a better buyer. And typically, the 8 EMA of one time frame will give you the entire trend of a lower time frame. And we'll get into this in probably two videos from now. But it's actually really cool. And I'll start just a little intro to this here, where the 8 EMA on a higher time frame is going to give you the direction of the bands on a lower one. For example, here's our 8 EMA, give or take, on the monthly. You go into the weekly, and you're going to find that is your general direction of the bands. Likewise, you follow this 8 EMA on the weekly, and that is going to represent your bands on the daily. You can see it falls pretty much right in the middle of it. And that's why we want to be a better buyer at the 8 EMA, say on the weekly, because that's likely representing a pullback to the bands on the daily. Likewise, if the weekly pulls back to the bands here, then it's likely a retest of the monthly 8 here. And again, we're going to talk about that a bit more in the fractal model video, but there's going to be some cool and fun implications from this, so definitely going to want to keep watching to then. But for now, let's just focus on trading with the trend, right? The 8 EMA is up, the bands are up. I want to be long on the monthly. Okay, let's go look at the weekly. The 8 EMA is up, the bands are up. I want to be long on the weekly. The daily, the 8 EMA is up, the bands are up. I want to be long on the daily. Strong confluence of all indicators. We absolutely want to be trading this on the long side. Okay. Now let's throw another application into the mix. The slow stochastic. Let's make this a little bit bigger too. So again, we talked about this a little bit in, I believe, our 5th video, I believe, something like that. And this is going to help us with our timing a little bit better. This is going to be our cyclical indicator because, as we know, all markets move in cycles. Cycle low, cycle high, cycle low, cycle high, cycle low, cycle high, cycle low, cycle high. And these are not always going to line up with highs and lows in price. But typically, you're going to want to be a better buyer at the lows and a better seller, at the highs. And this lines up pretty accurately with our stochastic, right? Better seller here, better buyer here, better seller here, better buyer here, better seller here, better buyer, better seller, better higher, so on and so forth, right? Typically, and it's not the end all be all, right? You know, just because the cycle is low does not mean you come in and immediately go all in. Just because the cycle is high does not mean you immediately sell all your assets. But in general, the best risk reward is going to be a confluence of all these indicators, right? What if I can get a cycle low at the same time as a bullish engulfing, at the same time that price reclaims the 8 EMA, at the same time that we get an uptick in momentum? You see that? Here, we have a confluence of basically every indicator we could want. We have a bullish engulfing. We have our cycles come all the way back down and crossed up. We have momentum, which was previously going negative and negative, now pops up. And our 8 EMA, which has been acting as resistance, has now been reclaimed as support. This is a very simple, clean buy signal on the Bitcoin monthly chart, right? And it also sets up a runway from here to here to be much more active on the buy side, the same way that when we cross here, we set up another runway to be more active on the lower time frames. So let's go ahead, let's just do some replay here. Let's go to one more candle. Nope, one more, come on. Oh, I think it's going by days, isn't it? There we go. So at this point back in January 2023, and this is where we flipped bullish and block circle, we've got our monthly cycle coming up, a bullish engulfing here, and momentum has started to reverse on the monthly. So one time frame is starting to look good. Keep in mind, we've still got some EMAs above us that aren't looking so good. They're still coming down, but these are going to take more time to reverse just given its monthly candles. Okay. Let's go see what we have on the weekly. So on the weekly, we can kind of see the same thing, right? On the monthly, you have your bands that are still kind of going to act as resistance up here, right? And then on the weekly, we also have the bands that could act as resistance in here. So things look good, but we're not out of the woods yet, so to speak, right? We still have yet to make a higher high above here. And we haven't really put in a higher low, right? We kind of did right here, but it was very short-lived. We essentially just hit the bottom and then went straight up. Okay? But if we remember, we have a monthly engulfing and we have a nice runway into the summer where we can probably make some good money. Okay? So any future dip, right now the weekly is a bit high. So cyclically, even though we have a good setup on the monthly, we can see that probably don't want to be a better buyer here. Just like over here, you probably want to wait for a little bit of a pullback on the weekly cycle before you start to get a little bit more active. So let's see where we go from here. And there you go. There's your weekly cycle cross down. This is going to be, did I just get rid of everything I did? Oops. This is going to be your first big opportunity to start getting a bit more active. Remember, our monthly cycle looks something like this. So we've got this runway into the summer where we want to be a bit more active. I don't remember exactly how low it goes here. Maybe 19 or something. I can't quite remember. But it's something like that. Anyways, you get a little bit of time. The weekly cycle starts to come back down. Let me fast forward this a little bit. I'm trying not to go past what I want to see. Anyways, here we go. You get a nice pullback. The weekly cycle is coming down a good bit. Your monthly cycle is still in an uptrend, so that's still all good. Price action still looks all good here. Did I keep playing? I must have gone a little further on accident. Oops. Let's go look at the daily. And we can see here, we have a beautiful daily cycle low right off the 200, and we have a bottoming tail plus engulfing setup, which I don't remember if it closes here or not. It does, yep. So now we've got a multiple set of factors that are all leading us to adding to our long positions, right? We have, why does this keep, you know what, we're just going to have to turn off the replay feature. It's kind of bugging out. We have a monthly engulfing setup. We have a nice long runway to make use of. We have a weekly cycle that pulls back about halfway, and you're not always going to get a full up down, like, you know, it's nice to imagine cycles always go like this, but if you look back quite often, you're going to turn around midway, you're going to go down, come up a little, turn back around. So this is not some kind of cheat code where you buy here and you sell, you buy and you sell, and you buy and you sell. It's not that simple, right? We're just trying to get a better sense of timing, being a better buyer down here and a better seller up here. And I should have noted this earlier, but I think I noted this in the indicator video. But if you want this exact slow stochastic, you can just type in on TradingView, slow stochastic. There's one here by Claudino, which I think is fine. And then you go into your settings, inputs, and I use 533 as my settings. I think 1053 is also a really good one. It kind of smooths things out a little bit, albeit it's a little bit slower to react. But I would encourage you to experiment with different settings for this. I think the original is 1453. It just depends on what you like. I prefer one that acts a little bit faster, but it's really up to your own individual preferences which one you would use. Anyways, back to focusing on the trend, right? So we reclaimed the monthly 8. On the weekly, we still have some resistance above us, but we know we have that cyclical runway, right, on the monthly. So we're looking to be a better buyer, but not really right here. We really want to get a little bit of a dip. We start to get our dip, so we go down to our trading time frame on the daily. And what did we see? A bottoming tail, engulfing setup right into our 200 period moving average, right into a daily cycle low, and a bottoming setup on momentum where our momentum was falling and then it reversed. So all in all, this is a very good buy opportunity. Right? Really, really solid. And then I believe next video we're going to focus on managing the trade. Maybe I'll go over this trade and how you can manage capturing profits on this entire move. I think that would be pretty helpful. But for now, again, we're just going to focus on the trend. So after this move plays out, you make some good money. We can see some interesting things start to change with regards to our trend. First off, on the daily, we've already reversed all of our daily downtrend EMAs into uptrend EMAs. So that's a positive sign. And now, after this big move, we've slowly started to flip the trend on the weekly. In that, our once bearish EMAs are slowly starting to flip bullish over here, ever so slightly. Now again, let's keep in mind what we've talked about in previous videos. The best times to be in an asset and the best times to trade are when these bands are expanding either to the upside or the downside. The more harder time to nail trades is when they are like this, or like this, or like this. Anytime they're really tight and they're going back and forth and back and forth, oftentimes this will be at a key pivot. For example, this was a key higher low in Bitcoin's trend before going much higher. This was a key lower high in Bitcoin's trend before going lower, key higher low before going higher. But keep in mind what we said last time. The goal is to capture the meat. You don't have to be in here and out here to make a lot of money. But if you focus too much on having to be in at the lows, out at the highs, you're probably going to leave a lot more money on the table. Anyways, after a bunch of this sideways plays out, we finally start to get some real expansion on the weekly, and the monthly 8 EMA really starts to get going. This is the best point where, let's turn the candles back on. This is the best point where all of your time frames really start to line up. You have the engulfing on the monthly. We talked about the trade on the lower time frame to take advantage of this runway. We get a little pullback. We cross up on our stochastic. Our momentum finally crosses 0, which is a big step. We get a bullish engulfing set up on the monthly that also closes above the range high. So we've got an uptrend now on our monthly. Our monthly EMAs are rising. Our monthly stochastic is rising. Our 8 EMA is rising. On the weekly, our bands are starting to expand. We have a price action uptrend. Our 8 EMA is rising. We just came out of a cycle low. We got another cycle low over here. On the daily, here's that consolidation period where it can be tougher to trade. Here's that breakout we saw in the monthly and the weekly. This is going to be when you really want to be nailing trades. Right? You break out with your monthly and weekly engulfing. That's a good time to get some exposure. And then basically after this, you can just come in and hammer every buy setup. And obviously, that's not always the case. Sometimes you're going to have a breakout that turns into a fake out. So let's not pretend that, you know, every strong breakout like that is going to go perfectly in your favor every time. But in general, if you're trading with the higher time frame trend and you're not always buying the highs and selling the lows, if you're looking to be a better buyer on the low end of the cycle and a better seller at the high end, you're probably going to have a pretty good time. Okay? So even just looking at this can easily identify a setup here, a BCI right here, another setup here, very obvious setup here, another little setup here, engulfing here, another setup here, another setup here, big expansion. And at this point, we finally have a setup that gets kind of cooked. So maybe at that point, you're closing out a lot of these trades and looking for some reaccumulation, which takes about, I don't know, 2-3 months. And maybe you have a couple rough trades in here in the meantime. Here's a decent buy here, bullish engulfing. Another decent buy here. And a lot of these trades will look a bit better when we talk about how to manage these trades. For example, if you remember our 1, 2, 3 profit rules. First rule, take profits 2 to 3 candles in your favor. Second rule, take profits 5 to 8 candles in your favor. And your third rule is a trailing stop. Okay? So all higher time frame trends at this point are looking good. We get a little bit of a market pullback. Let's go analyze how the higher time frame trends look after that. I don't know why it keeps pulling me this way. So at this point, it's barely even visible on the monthly. The monthly EMAs, monthly EMAs are still up. The monthly 8 EMA is still up. The cycle is starting to get a little bit extended, but in general, as long as the trend is good on the weekly and the daily, sometimes this is not that big of a factor. And this is more big in crypto than anything else, but also in the stock market too. For example, you go look at US equities. These monthly stochastics can stay overextended for years. I mean, look at this. We broke out into overextended territory in June 2016 in S&Ps, and then we did not break back down until June 2018. 2 years of being, quote, overbought. So we won't, I'm not saying, you know, come in, definitely buy here and definitely sell here. But in general, the better buys are going to happen up here and the better sales will happen up here. So eventually, even if we stay up here for a while, this will start to come down, and that's going to be a time to probably reduce exposure. It'll be fun to look back on this in the coming years and see if I was right. I do believe by the end of 2025, we will have a pretty harsh monthly cycle coming down on Bitcoin, but we'll see. We'll see. Anyways, back to what I was saying. Nice pullback in here. Again, you know, whether or not you want to actively trade these kind of sideways periods is up to you. I got a lot of friends that are very successful trading ranges and stuff. I much prefer to trade a trending market, right? So, you know, power to you if you want to come in here on the daily and trade even as these bands start to roll over. I would rather not, but you know, it's totally still doable. Anyways, talking more about trend, if we recall on the monthly trend is still up. Weekly trend is still up. Weekly 8 EMA test is a big success. And the daily does lose the bands. So I'd say if you were in some trades all the way up, it does kind of make sense to cut some risk here. And I know a lot of people, oh, but I don't want to sell the lows, blah, blah, blah. It's not the end of the world, okay? Because what happens pretty much right after this is that daily pullback turns into a new uptrend once again, and you can just immediately get exposure again. So what? You miss out on this to this by ensuring that if this turns into this, you're not just bag holding back to zero. And trust me, it's times like this where you get a really clear trend break and people just hold through it, and then it reverses and they start to think, I knew I should just hold through the trend break. It's times like that when you actually get a trend break like this and people get accustomed, especially in crypto, to just holding through it. I knew I should have just held through it. And they keep holding, and they keep holding, and they keep holding. This is what you want to avoid by selling trend breaks, okay? And if you get too cozy, and it's really easy in crypto to get cozy like this, of holding through every trend break because you're confident it'll go higher eventually, you're eventually going to get cooked hard. So I know it sounds kind of silly to think selling here is a good thing when you can see where we go after, but keep in mind, you can just rebuy right here on this new breakout. Simple as that. You miss out on this little bit, and you can end up capturing all of this. And ensuring that you're being consistent. So say if we break trend here, you're probably still going to exit. Thus that when the final trend break comes, we looked at this one. Let's look back in the top of the last bull market. Like the last bull market, or sorry, 2017 was a great example. It did pretty much the same thing. Huge trend break, immediately reclaimed. People that sold feel bad. Huge trend break, immediately reclaims. People that sold feel bad. So then they come in the next time and they say, well, last time trend broke, it immediately reclaimed, so I'm not going to sell this trend break. And then they're bag holding the entire bear market. Right? So selling at these lows can feel bad, but if you just keep in mind, even if you sell here and you have to rebuy these new uptrends, you know, here, you're still going to capture most of the move. Even if you sell here and you have to rebuy over here, you miss this and you capture this. Thus, that when you do sell here because you're being consistent, you're going to ensure you're not the sucker that's going to bag hold all the way back down to here over 3 years. Just an important note. We talk about this a lot on streams. The same, like, and it's already done at this bull market multiple times. You know, people that got out at this trend break are feeling bad because it immediately bounces. People that got out here are feeling bad because it immediately bounces. And same here. It's conditioning people to not want to cut risk ever. You know, thus that when the top is eventually in on Bitcoin at 150K or whatever it'll be, it'll paint the exact same thing. A trend break so clear that people expect this, and that's when it'll do this. Maybe not that drastic, but you get the idea, right? Follow the trend. The trend is your friend until it's not. When this monthly 8 EMA starts to reverse, right? When this 8 EMA starts to become like this, and when this weekly bands starts to roll over like this, and when your daily trend flips bearish like this and like this, get out. Okay? Don't feel like you have to be a hero. Everyone's telling you, no, bro, trust me, it's going to all keep going up. Focus on what you know. The trend is your friend. If it's really going to keep going up, there's always going to be a new trend. For example, here, you cut when the trend gets weak. The trend flips bullish, you can get back in. You cut when it gets weak, it flips bullish, you can get back in. Cut when it gets weak, maybe you hop in here for a quick peek, you hop right out. Look how much pain you can avoid while still capturing the meat. You know, cut, rebuy. Capturing the meat of all these moves. Cut, rebuy. Cut, rebuy. In and out. You know, you can still capture the majority of everything, even if every now and then you're selling the bottom, right? It's good to condition yourself to focus on the trend and the market cycles, okay? Moving averages will be your best friend. Again, I know I've done it like 4 times now, but hide the candles and you can still visualize the trend almost even better, right? And it'll help you stop being so biased. I guarantee you, without using candles, you could probably go and outline the best times to be long, the best times to be short, the best times to not be so involved, right? Like, you could very easily pick all these things out just from moving averages alone. Use them, right? They will be your best friend. And then add cycles on top of that. Again, whether you want to use the 5-3-3 setting or the 10-5-3 is a bit smoother. In general, I mean, just check this out. Even just last week, a super simple, clean setup, right? We get the bullish engulfing right into the bands. We get another pullback and another bullish engulfing, albeit a little bit of a delayed one. We get the cycle crossing right at the same time. We get an uptick in momentum, confluence of factors, right into the weekly 8 EMA. The monthly trend is still up. You know, everything looks good. Confluence of factors. Okay. Let's see. How long? It's already been a 30-minute video. Oh my gosh, man. If you guys have tuned into my live streams ever, you know I can just talk and talk. So I do apologize if some of these end up a little bit longer than I intended, but I just love this stuff. I could easily talk about this for dozens of hours, so I guess we'll wrap up this one here for now. I just really want to hammer in how important it is to focus on the trend. I know I've said it a dozen times, but the trend is your friend. That's the last time I'll say it. Okay. So in the next video, we will talk a little bit more in depth about actually managing trades that you've already opened, because this is honestly where the majority of traders tend to make mistakes. You can have really good analysis, but if you can't manage the trade properly, you're going to get cooked, you know? So I'll try and talk about how to set and manage effective stop losses. And then we'll talk a little bit more in depth and go over some examples of our 1, 2, 3 take profit strategy. So hopefully you guys can stop watching your assets go all the way up and come all the way back down. As someone who has done this many times, we're going to spend some time talking about it. All right? So if you guys have any questions on the trend and market cycles and, you know, how to use the stochastic, which again, I don't think everyone needs to. If anything, EMAs are going to be your best friend, but this is just something to help us a little extra with our timing. If you guys have any questions about this stuff, feel free to reach out to me in Block Circle. I'm active pretty much every hour of the day, so no shame in reaching out. I'll be happy to help you however I can. And yeah, until next time, I hope you guys have a great rest of your week. Peace.